Welcome to ForexTV.com. It's Tuesday, December 11th. I'm Remy Huki for your New York Forex Market Buzz. The market awaits the interest rate decision from the Fed Reserve, scheduled for 2:15 p.m. Eastern Time. Ahead of the rate announcement, Euro-dollar is trading around 147.03 as of 1:15 p.m. Eastern. Dollar-yen is around 111.70, while sterling-dollar is at 2.0387. Joining me this afternoon is Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. Good afternoon, Matthew.
Good afternoon, Remy.
Thanks for joining us ahead of the Fed rate announcement.
No, you're welcome. Yeah, it's going to be an interesting afternoon.
Indeed, and as the market awaits the decision, we're seeing the dollar trade in a fairly narrow range against the euro around 147. So the first question for you is, by how much will we see a reduction in the Fed funds as well as the discount rate?
Well, we're looking for a 25 basis point cut in both rates. That's the Fed funds rate and the discount rate, which is very much in line with market expectations. At this point, we think there's no need for the Fed to cut by 50 basis points. And there's also the risk that if they cut by 50 basis points, it might send the wrong signal to the market, a signal that maybe the Fed is even more worried than they are willing to say through general statements. So at this point, we are sticking to our call of a 25 basis point cut today, but then followed by another 25 basis point cut early next year.
Okay, well, the accompanying statement post-Fed will also be closely watched. Later in this week, we'll be getting U.S. inflation data for November as well as retail sales data. But Matthew, in the post-FOMC statement, tell us what we need to keep our eyes on regarding inflation risks and growth.
Well, I think the one thing that we will focus on is the risk where they, last time on October the 31st, they said the upside risks to inflation are roughly balanced if you consider the downside risks to growth. So they were looking at balanced or roughly balanced risk on both sides. We expect the Fed to become slightly more dovish, underplaying the upside risk to inflation and upplaying the downside risk to economic growth. I think the other sentence that we'll definitely again see in the statement is regarding the turmoil in the financial markets and the disruption in the financial markets, and that any cut today, and I've already said we expect 25 basis points, will be to try and forestall some of the adverse effects on the broader economy coming from the disruption in the financial markets.
Well, let's take a look at the major currency pairs. As you mentioned, the market has priced in at least a 25 basis point cut. But let's talk about the implications this has on the U.S. currency. And post-rate decision, what ranges do you expect to see, first of all, in euro-dollar and dollar-yen?
Well, on the euro-dollar, we're looking 145.76 to 147.83, but I must haste to add that this is based on a 25 basis point cut by the Fed. If we see a 50 basis point cut, I think that 147.83 will quickly have to make way for higher numbers. On the dollar-yen, we're looking 111.39 to 113.28 on the resistance side. So those are the currencies on the major against the U.S. dollar. If we look against the euro-yen are still trading on the higher side, and we're looking at support at 162.01 to 167.10.
Well, while we're on the topic of central banks and the major currency pairs, we have the Swiss National Bank coming out with their rate announcement later this week. If you could give us your latest forward-looking forecast for that SNB as well as the Swissy.
Yeah, I think that as far as Switzerland is concerned, they're very much in the same boat as the ECB. They are in hand tightening mode. They would have loved to hike rates further, but given the international financial turmoil and uncertainty, it would be very difficult for them to hike further. So at least at this week's meeting, they will keep rates, if we look at the mid rate at the moment, 2.75, we believe they're going to keep that rate unchanged, and maybe early next year continue hiking as the economy is running slightly above capacity and inflation pressures are a concern to the SNB. But for the time being, they would, just like the ECB, remain on the sidelines.
Okay, and last but not least, as we head into year-end and after we have today's Fed decision, we're only a few weeks away from 2008. So for the so-called commodity currencies, if you could give us both your short-term and long-range outlook.
Well, on the commodity-based currencies, we remain fairly optimistic on the two antipodian currencies, that's the Kiwi and the Australian dollar, especially the Australian dollar, where we think that the RBA might hike once more in the first quarter of 2008. So we look at the Australian dollar to continue to appreciate against the US dollar, moving above 90, and it could move as high as a 92 towards a 94 cents in the first quarter, which we would then see as the peak in the cycle for the Aussie dollar, before slowly but surely starting to lose some value against the US dollar in the remainder of 2008. Kiwi would follow a fairly similar trend. The Canadian dollar as the third commodity-based currency in the G10 group, we have a slightly different profile, remaining around current levels, give and take 1 or 2 cents in the first few months of next year, and then slowly but surely continuing to weaken against the US dollar. The reason being that we've seen the Bank of Canada already starting their easing process, and we think that will continue into at least the first quarter with 1 or even 2 more cuts by the Bank of Canada. And as the US dollar starts to strengthen and make a bound turn in the second half of 2008, we see ultimately dollar Canada moving from currently just around parity towards the 110 level. So quite a sharp depreciation expected from the Canadian dollar perspective in 2008.
Okay, Matthew, thank you very much for your forecast, and thanks for your insight today.
You're welcome.
That wraps it up for your Forex Market Buzz with Matthew Strauss, Senior Currency Strategist at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.